Welcome to JuPulse, your go-to source for crypto market insights from JuCoin. Today is April 28th, and we're breaking down everything you need to know about the current market landscape, from global macro trends and investor sentiment to key crypto indicators and Bitcoin's technical setup. Let's dive in. Macro market update. Market sentiment stayed cautious over the weekend, with skepticism around President Trump's comments on potential tariff cuts and Chinese officials denying active negotiations. The University of Michigan's Consumer Sentiment Survey showed a dip, reflecting lingering trade uncertainties. Despite these concerns, U.S. equities performed well. S&P 500 plus 0.7%, Dow Jones plus 0.1%, and NASDAQ plus 1.3%. Strong tech earnings drove gains, with Alphabet up over 5% and Nvidia and AMD also rallying on AI demand. Our view: short-term market strength remains, but caution is advised amid persistent macro risks. Fear and Greed Index. The Crypto Fear and Greed Index reached 61, which is in greed territory, down slightly from 65 yesterday, but still reflecting rising risk appetite. Bitcoin is approximately at $93,500, Ethereum holding above 1.8K, and the crypto market cap is roughly at $3 trillion. Takeaway: sentiment is heating up, but discipline is key as markets push higher. Bitcoin dominance. Bitcoin dominance is around 64%, maintaining its upward trend with 9 consecutive green weekly candles. Investors continue favoring BTC's relative safety, although dominance nears historical resistance at 64 to 65%. Outlook. Bitcoin still leads, but watch for potential rotation into altcoins if dominance reverses. USDT dominance. USDT dominance has dropped to around 5%, signaling a stronger risk appetite as capital rotates back into BTC, ETH, and altcoins. Continued decline supports bullish crypto sentiment. A reversal could warn of cooling enthusiasm. Liquidation heat map. BTC trades around $93,500. Liquidation clusters build above 94K to 96K, while lighter liquidity below suggests potential support near 91 to 90K. Conclusion: momentum slightly favors an upside squeeze, but volatility risk remains high. Moving on to Bitcoin's technical setup. We're analyzing BTC USD on the daily time frame. As we discussed in our previous update, Bitcoin had been forming a descending triangle pattern since the beginning of the year. Earlier this month, we saw a bullish breakout supported by strong volume. BTC cleared the key 89K resistance and is now consolidating just below the critical 94.5K level, with multiple touches and tests at this zone. If Bitcoin manages to break above 94.5K decisively, the next major resistance to watch would be around 99K. On the trend side, the EMA 10 remains above the EMA 20, with both moving averages positioned below the current price action. This alignment confirms short-term bullish momentum is still intact, supporting the breakout structure. However, caution is warranted. While the initial breakout was supported by volume, momentum has slowed and trading volume has started to taper off during this consolidation phase. The RSI is currently sitting around 67, nearing the overbought territory, suggesting that bullish momentum might be losing steam. Additionally, Bitcoin's price action is starting to resemble an ascending broadening wedge, a pattern that typically leans bearish if confirmed. If this bearish structure plays out, we could see Bitcoin retesting the 89K level to seek new support. In summary, the breakout remains valid, but without a clean move above 94.5K backed by strong volume, there's an increased risk of a pullback. Bulls need to reclaim resistance soon to maintain momentum, while bears will be watching for a break back below 92 to 89K. The JuPulse verdict. Here's our current market outlook. Bullish factors. 1. Bitcoin broke out of a multi-month descending triangle with strong volume. 2. BTC is consolidating near 94.5K, holding above 92K support. 3. Bitcoin dominance remains strong around 64%, showing capital rotation into BTC. 4. USDT dominance is falling, reflecting growing risk appetite. 5. Liquidation clusters between 94 to 96K could fuel a short squeeze. Bearish factors. 1. Volume is tapering off, suggesting weakening momentum. 2. RSI is nearing overbought at 67. 3. An ascending broadening wedge is starting to form, typically bearish. 4. Macro uncertainty remains, especially around trade tensions. Our final verdict. The breakout holds and the backdrop remains cautiously bullish. A clean move above 94.5k could open a rally toward 96 to 99k. Failure to break could trigger a pullback to the 92 to 89k support range. Stay flexible and watch how BTC reacts at 94.5k. The next move hinges here. Now, as we wrap up, we'd like to mention that this content is for educational purposes only and does not constitute financial advice. Volatility remains high. Always manage your risk and stay flexible. By the way, if you're trading spot or futures, you can also earn extra USDT through the JuCoin Rewards Hub. Sign up through the link in the description and start stacking rewards today. If you found today's breakdown helpful, make sure to like the video, subscribe, and leave your thoughts in the comments. Got a question or a different take? Drop it below. We'd love to hear it. Catch you in the next one.